Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're discoing. Before I start, please like if you like, share, subscribe. This is a market brief, and I'm kind of changing my sentiment now. I'm leaning toward bearish because of technical reasoning. A trader always should always change his or her mind based on the charts. Well, this is the 50-day moving average of equity put to call, and I did have this chart long time ago. And I always say if it goes below 52, the market is not as bearish as it should be. And now it is over 52 right here. And if you pause and look, last time it was at this level, we have the 20 to 20 meltdown. And before that, we have the 2018 sell off and the 2019, the late 2018, early 2019 market meltdown. And now it's very elevated at 56. This is the 50-day moving average equity protocol. And I was really counting on this one on the disco signal. Uh, every time you have a bearish crossover, you have a rally in the stock market. Yet now, the slope of the 20-day moving average for the equity protocol is up sloping, which is telling me it going back up, which means no bearish crossover, which means it's unlikely to have a real good rally very soon. Maybe next week, but not very soon. By next week, maybe 5 trading days. But before that, I really don't think so based on these things. And this is the Dow Industrial, and we sold off today. It's not really a sell off. We found sellers at an extremely good seller zone where you see this is the volume by price. It is the most traded level in 2021 and 2022. So we are here. So the huge overhead resistance, and he had rejection and almost a dark. It's not a dark cloud cover because it closed right here, so it's very close to bearish Rami more likely. It is not a bullish candle, and that's for sure. Another thing I really don't like it is the death cross. It's an impending. Maybe by Monday, Tuesday, we would have this official. Usually, with few exceptions, like in 2016's, usually you would have a price retracement when the death cross takes place. It is when the 50-day moving average goes below the 200-day moving average, and this is a chart that shows these things. Last time it happened, it was 2020, a meltdown, and before that it was late 2018, and we had a meltdown, and before that, last time we had with 2016, this is what I talked about. 2016 is it was very gyry market, was not very okay market. So we had one here in August 2015, and we had a head fake and a bullish crossover, then a bearish crossover in 2016. So with this exception, it is extremely reliable. Let's do 10 years. How about that? See how reliable that is. 2013, we have the bullish crossover. We had a semi. Well, okay, not another head fake. It didn't last for long. It was a bearish, then bullish crossover. So we have 2013 and 2013 and 2016, we had this stuff. It worked during the death ceiling. This is the death ceiling time, 2011 and 2012. It worked perfectly. It was in okay. This is after the that meltdown, the market flush during the Greek debt crisis. So this one didn't work. Mainly, it works really, really reliably in the past. So we give it to 2010 and 2016, 2013 is the only exception, which means it's really reliable. So it's really smarter to be on the sidelines and see, give it like 7 trading days. How about that? 7, 10 trading days and see what happens after that. Okay, so this is the Dow Industrial. Let's look at the Qs. The Qs already have the death cross, so it is taking place right now. Not only that, it has rejection from the 10-day moving average. Okay, it closed well. Okay, the 10-day moving average. So it's the same thing in the Qs. You had sellers at a seller zone, which is an overhead resistance. You would not want that. So seller zone right here with a 10-day moving average and a bearish crossover. A disciplined technician would not take a long position right now. Okay? Conclusion. Let me recap. Elevated 50-day moving average for the equity protocol. The disco signal is not going to be in the near future. I was really relying on that. I did not like the upsloping 20-day moving average for the equity protocol. Overhead resistance for the Dow. Sellers at seller zone. Impending death cross. We showed the importance of death cross in the past, and it's extremely reliable. Death cross is in effect for the Qs. Seller zone found sellers at a 10-day moving average. The euro is not doing very well. It made a new low today, even though it closed above the previous day's low. But everything here is bearish. I can see bearish stochastic, bearish MACD. Okay, even in the weekly time frame, even though the week is not over, we have even though we have beautiful bullish divergence, yet the MACD is it's bearish. I don't like that. So why am I talking about the euro? It shows me that people are running for the dollar, and it is not a good thing to see when you see a market going down or might go down even further. Please like if you like, share, subscribe, and do remember the disco's forever.